One.
Welcome to the Energy Hour. The Energy Hour is brought to you by Quality Home Improvement, Southern California's premier residential and commercial contractor, making homes and businesses energy efficient, one building at a time.
What's going on, Southern California? My name is Christopher Moss. I am the host of the Energy Hour podcast. And of course, you can see us live at Quality Home Improvement at QHIINC.com/TEO or on any of your favorite podcast applications. Today is November 10th. Happy Friday, everybody. Steve, what's going on?
Hey, it's good to be here again, Chris.
Oh, my goodness.
Getting
it's Friday.
ready for the weekend.
Already. What's up? Where'd the week go?
Oh, it just
poof.
Went, in a millisecond. So, but we've got a great show today. And yes, I've got two wonderful guests here, and we'll be introducing them now. To my left is Mr. Eric Chang.
What's up, Eric?
Doing well. How are you, Christopher?
Oh, it's Happy Friday, brother. You're here.
Yes. Happy Friday, everyone.
All right.
Yeah, it took me literally 2 months because Eric is such a busy guy to get him on the schedule. Yeah, he is. And also, he's a recent newlywed. So
congratulations.
Thank you so much. I got married last Friday, so that's why it took me so long. So, yep.
And he even decided he'll still come on our show instead of being on his honeymoon.
So wait a second.
Don't tell my wife that.
Wow. I feel honored just to have you here, man. You know, talking about what you do, and congratulations to you and your wife and the 100 years that are in front of you, man. Whatever you do it with a grain of salt and have fun and don't look back.
Thank you,
That's all I can recommend,
Appreciate it.
Congratulations. Who's this other handsome guy over here, Steve?
Yes, right over here is Joe Alagna. He's with Coswell Insurance, and he's a great insurance agent that has helped me many times with clients that have had very difficult times in finding insurance. And so he's going to talk about the difficulties in getting insurance and with the costs going through the roof, especially here in California. So he's got a lot of great information for us.
You know, it's funny you say that, Steve, and Joe, we're going to get in that in a minute. I happen to collaborate with 7 or 8 homes in different parts of the United States. And I hear that there are a lot of things going on, Steve, in this industry. So I'm really going to put my ears open when I listen to the insurance part of things. So, Steve, Peak Finance, hello?
Yeah, Peak Finance. We're a direct lender. You know, we've got a lot of great insurance products. And if people want to find out more about some of our specialty programs, just go to our website. It's financialbrokers.net. That's financialbrokers.net. You can see all of our disclosures, licenses, and we have a whole plethora of programs for people, whether they're buying, refinancing, they need a HELOC, commercial loan, a reverse mortgage, or private money. So we love to help people with that.
Well, let me tell you, God knows we need creative financing out there, right, guys?
Absolutely.
Because, you got a lot of banks, man. They're tightening that grip. And we see the interest rates going up little by little. And, you and I were talking about, I don't know, maybe a month ago, how rates used to be at, 18%?
Yeah, back in the early 80s.
Oh, man.
And here we're all sweating. Oh, they're at 8.25. Oh, my God, the sky is falling, and that's really nothing compared to what it used to be.
Right. Yeah, we got spoiled over the last so many years because, the rates just shot up in the early 80s, and then going into the 90s and through 2000 and up until a couple of years ago, rates were extremely low. And when, rates started going up a little bit, people says, how come rates are so high? And they were at maybe 5%. And
I know.
It's like, you don't realize that 5% was super low for a long time.
My first home was 12%.
Really? Wow, 12%. And you probably felt good about it.
I didn't feel good about it, but I wanted to buy a house. So
hey, honey, we got the keys. Let's do it, right? 12% is 12%, right?
We refinanced a few
okay,
times.
yeah. I've refinanced enough where I got holes in my note. You see, 1980, 1986, 7, 8, all the way up to whatever we're at now. I'm at 6.45%, and I really don't care about it. What is it, Steve? If you're used to the house payment, who really cares?
Well, and again, it's what are you doing with the house? Because especially with Eric here, he is going to be talking about house hacking and explaining what house hacking is. And with house hacking, you look at the people who are living in the house are basically making your payments. So if the mortgage is at 2%, 4%, 6%, even 8%, it's more for him, how much cash flow is the property generating from the people that are living there?
You take Airbnb to the next level, my friend. That's amazing, man. So if I have a 4-bedroom, you and I collaborate on a purchase, 4-bedroom, 3-bath, you would figure out how to cut that up and put it on paper, make it make sense, and then make some cash. Am I right?
Yeah, so if we collaborated, or when I should say, we collaborated
I love that.
Bedroom,
Nice.
There's a lot of opportunities for what you can do with that. So, for example, I do house hacking. So you essentially have and utilize that as your primary residence. What that allows you to do is put you the lowest amount of money down, such as like a 5% down on a single family home. And then you can also get the best interest rate on that loan compared to if it was like a rental. With that, you can pretty much lock that in for 30 years. And so you don't really have to worry too much more about the mortgage payment. From there, you're talking about 4 bedrooms. Well, if I lived in one, I can rent out the other 3. And I can essentially use that to offset most, if not all, of my entire mortgage payment. And so that's essentially the idea behind.
Incredible.
Yeah.
So you're like taking a room and it's like their own little world. I can't even get my kids to pay rent. So, they've been living there all their life. They're like 30 and 35. But, what do I know, right? So you're taking this, if I'm right to say this, it's your primary residence.
Correct.
So it's like you're living there, but you really don't have to, right?
Well, I mean, you should be living there.
A tent in the backyard maybe. Or
you should be living on the property. I've heard some creative ways that people have done house hacking. Like some people rent out all the bedrooms and live in the living room. Some people lived in the trailer that's parked on like the
Get out of here.
Those are pretty extreme examples. But what I've done has been living in one of the bedrooms, and I need like share bathrooms and things like that. But at the end of the day, the discomfort is worth it because most of my tenants, they pretty much pay off my entire mortgage, even at these higher interest rates. We bought our house, or I have a partner on this one. So we bought the house last June. And so my interest rate's in like the 5. So it's pretty
wow.
good.
Nice. Okay.
Yeah. But we've been really creative in our strategy, not just with, renting it by the bedroom, but also furnishing it to also increase rents. And that really has helped offset our mortgage payments. So I live nearly for free actually right now.
Steve, that just blows me away, man. This guy actually just took the equation of home ownership. You've turned it inside out. You figured out a platform how to stabilize the rent, right? I mean, if you think about it, it's just somebody else is paying your rent. And, it takes rentals to a whole new level. Mm-hmm. So you don't have to say, and just like we've done, Steve, you buy a secondary house and sometimes the mortgage company will say, oh, okay, it's your second home. And when you get into the third or the fourth, they're like, you need an investor loan. So now we have to give you the microscope, put the probe where it doesn't belong. And they need to look at every orifice, right? It's really just weird, especially insurance companies.
Right.
Am I right to say that, Joe?
Yeah, there's a difference between your, where you live, your homeowner's insurance, and obviously an investment.
They are asking all the questions, and you sit there and you feel intimidated, and you're like, all I want to do is make some more money, and this is the best way to do it. And all of a sudden, the roof caves in. But I love your approach because now primary, secondary, you don't just have one person or a family. You've rented. You're like a hotel. If you think about it, I mean, hotel, Hotel Eric. You know.
So
do you have a logo yet?
I should create one after this podcast.
I know.
I have to ask you, since you're just getting married, how does your bride feel about this?
Yeah, so we actually don't live together quite yet, but we will be moving in probably later next year.
But you know what? Don't do that. Let her rent out her house and you rent out yours. Come on, let's do this the right way, man. You can meet on the weekends.
We had this conversation actually. So she's actually comfortable with a different form of house hacking where we live in a 2 to 4 unit, and so instead of sharing actual bedrooms within a single house, we would have share different one unit together and then rent out the other units within the same lot. And so she's more comfortable with that. And as we're going our family, that's kind of what works for us. But, before we got together to the married portion, like I was kind of like, a single man. Like I can live in a bunk. Exactly. Live in a bunk, have some roommates, it's a great way to
college,
network, really.
Right? Come on.
Pretty much. So,
but would this equation work even better if you own like a fourplex?
Why not?
I mean, right? It's got to have a title. It's got to have owners on it, and it would be your primary resident. I mean, does it work like that, Steve?
Yeah, it can.
Did I say the right thing? Or
yes, of course. Yeah, because you could have a fourplex or
an eightplex or a 12plex.
Yeah, well, you could be owner occupied, and then in each unit, then you could have individuals renting each room instead of renting out, let's say, the whole unit to one family. You're renting out the bedrooms separately, but you're still renting, or you're still living in one of the units, and then that could be still an owner-occupied property because you're living on site.
Totally dig it, man. And you can have Bo Winkle at 111 Elm Street, and then Sally Sue at 111 Elm Street. The list is long, right? It doesn't matter. They just got to forward their mail and mail call. Everybody gets their mail and everybody's happy. Now, do you have like a big kitchen, or do you look primarily for nice kitchens with an island and stuff as your future investments?
Yeah, I think for a rental, you don't need like a class A kitchen, and let's say it's like a B neighborhood. You kind of match it to the type of tenants that you're looking for. I see. For the rent by room model, we typically target either some of these grad students that are at a university nearby or young working professionals who are looking to save some money, don't really mind kind of talking with other young working professionals. So we need a serviceable kitchen that matches and kind of can fit the total number of tenants that we can have in that house, but it doesn't have to be like, best quality of everything. So
gotcha. So is it my impression to say you and your wife, you're collaborating and you say, wow, this is a 4-bedroom, 3-bath. I can hang out in one of the rooms and we can rent it out for X, and then the positive cash flow is Y. Is that how you try to put it together?
Yeah, I think about it that way, but I also think about how to satisfy the owner-occupied loan requirement, you only have to live there for 1 year. And so after that, like even if you don't like it, you can just move out after a year and
re-rent the room.
And then you just rent out that room that you're thinking of.
Steve, is that true?
That's absolutely true.
Gosh, you got all the angles, dude. We got to hang out.
Yeah. And so when we live in California, right? It's very expensive to live out here.
You ain't kidding.
I really think about like how it's going to perform, not just in that 1 year, but also once I move out. Like how well is it going to do once I move out and I rent out all the rooms and, figuring out management and things like that. But that's really what I'm thinking about. It's the bigger picture and how that property is going to perform in the long run.
Well, when you get to that point, call me up. Yeah. We've got a bunch of property managers. We got a bunch of, houses rented out, and they're in different states. Yeah. And we would be more than happy to collab on that. You know what I mean? Me and Steve talk about this all the time. The knowledge that we have, and especially in your group, Steve, this network that you guys have put together with Aaron and Eric and everybody else, right?
Yes.
If you guys aren't involved, are you involved with this network yet?
Are you referring to the
group,
Inland
the
Empire?
Real estate?
Yes. That's how we met, actually.
Oh, what? Okay. Are you in it too, Joe?
No, I'm not.
Oh, boy.
Not yet.
Hang on. Yeah, not yet. That's exactly right. This network is dynamic. I can't wait to join. I just was told last podcast with Steve, and I'm going to get me and a friend to get down there and get dirty and rub some elbows. But talking about a lot of classy opportunities, right? Have you went up on the stage yet and talked about some stuff?
Yeah, I actually presented not too long ago on house hacking. I spoke for about 30 minutes. I forgot. That's how long it lasted
Seriously?
in my head.
Wow.
I'm just going through my experiences getting into real estate investing, my investments, as well as kind of like the, logistics between managing it, talking through tenant screenings, things like that.
Yeah. And there's credit you have to check, right?
Absolutely.
Does that really matter? I mean, credit changes like daily, right, Steve?
Well,
I just bought a dog too, and that wasn't on the list.
yeah, everybody's different as far as, credit, what they'll accept, and will they go by a score or will they go by what's on their credit?
How many FICO levels? Like they have like 12 different FICO 89 now, or I mean, just crazy, right?
Well, you have 3 major credit bureaus, so you could pull all 3. You could pull 1.
Okay.
You could pull 2.
They even have one for renters, right?
Yeah,
I think so.
Yeah, you could do it. They have FICOs for credit card scoring. They have it for mortgage scoring.
Well, you know what they say? If it's on Google, it's already there.
Mm-hmm.
Yeah.
Everybody's talking about it.
Yeah.
So house hacking specifically, I'm blown away, man. I never thought about this. And you know what? We had the roommates. We shared, and everybody, he ate half of my pizza, I ate half of his, stuff like that. And this house hacking, man, seems to be pretty lucrative. And if you do it right, it's like having tenants that are going to pay your mortgage, make you some serious cash flow. And it looks like it would be easy to replace somebody, especially if you're in a college town. Hint, hint. Right?
Right.
So, yeah. My daughter was at Cal State Stanislaus, and she lived on campus. That was a financial mistake. But, and then off campus, they had this 5-bedroom house. And I kept looking back and go, what are these guys doing? In a sense, they were house hacking, just like what you're doing, and not really knowing what they were doing. They just filled rooms. Motel 6 ain't got nothing on you, friend. So, you're in the neighborhood. Eric's in the house. Awesome, man. So, Joe, what do you think about all that? You ready to move in or what?
Well, I don't think I can house hack in my home because I'm not too sure about how my wife will feel about it. That's why I asked them the question.
She could take the other room.
Now, I can imagine maybe I can buy another house and move in myself, and I can just sort of live there half the time. How long do you have to live in a house to be considered your primary mortgage? Maybe, Steve,
1 year.
1 year. But,
Yes.
I mean, can you live there like half the time out of that year?
Don't tell the lone person.
Yeah.
Now, that's a loaded question, Joe.
Yeah.
Come on now.
But I have a question for Joe, and this getting back to the insurance. If somebody's house hacking, will that affect the rate on insurance versus just somebody who's living there with his own family? Or let's say he has a 5-bedroom house and he's renting out to 4 other people. Does the insurance company care, or what do you have to say about that?
Well, there are problems with Airbnbs with a lot of insurance carriers.
Oh, yeah.
So that's one angle. I would say you never really want to lie, but if you go into the application saying you're going to rent out 2 or 3 rooms, that actually it's not terrible as long as you are living there. It's your home.
Yeah.
You have that
Okay.
right. But there are some limits. And
Right.
I think once you get beyond maybe 2 or 3 adults living with you, that then you start to go into a different category.
It constitutes multifamily in a big way.
But anybody could rent out a bedroom or 2.
No,
I don't
that's
think there's
true.
I don't think there's any issue, and I don't think most carriers have a problem with that.
Wow. Okay. So not too hard in the
Right.
insurance business. Just got to get the right one, right?
Well, yeah. California is a difficult market right now, no question about it. 3 of the largest insurance carriers in the world, well, at least in the country, State Farm, Farmers, and Allstate, have left California for new policies. In the last year.
Wait a second. They're not.
Not writing new policies. They're still taking the money that's due them in the policies that they have written over the many years past, but they're actually not writing new policies.
Well, you know what? I can see where, there's volcanoes, fire zones. And look at Florida. Every 5 years it's underwater, then they have to rebuild. And everybody's back. Florida's back. And then it has another tornado. Tornado Billy Bob just flew through and, wiped out half of Florida again.
Right.
And Texas, right?
Not so much Texas as, well, parts of Texas. You're right.
In the Panhandle right there, you can get some nasty weather.
Yep.
So they just pulled out of the state.
Yeah, they basically got to a place, and it's not just not because of fires. It's multi-pronged why this has happened. But basically they came to a place where, due to regulation, climate change, inflation, whatever you think of climate change, there's been a lot of fires. Most of the big catastrophes in California have happened in the last 10 years.
Northern California, look at that one.
Yeah.
PG&E, one of their little things caught on fire and wiped out that whole community up there.
Right.
Just crazy.
And then with the regulations, most people don't realize that over the last 20 years, California has lower insurance rates for homeowners than other states.
Really?
Yeah. And,
okay.
But that's sort of created a situation where now, when they look at their actuarial tables, they basically feel like, hey, every policy we write in California, we're losing money. So that's why they've done that. And they're not the only ones that have left. So we have very limited choices today when it comes to homeowners insurance.
Well, that's amazing. Fortunately, knocking on wood is like my forehead. I have a house built in 1986, going on 39 years now. First mortgage. Probably crazy because I kept it, or I should have got rid of it a long time ago. But my homeowner's insurance only about $2,400 a year. Mm-hmm. Now it's like 1.25 of the gross amount. Is that how it works?
I don't know. I'm not familiar with
$500,000, brand new house.
Yeah.
How do they?
It's going to depend on where the house is located. So the rate will be very different depending on if it's near brush or forest.
Oh,
area,
I see.
That type of
Gotcha.
thing. Yeah. If you take a typical home in the middle of a city, an urban area, your rates are, well, they're going up, but they're still reasonable. But
reasonable, yeah.
As soon as you get, I live in Chino Hills, and a lot of these homes are up against, places that can burn. And so the big carriers don't really look closely. They look at a zip code, and they basically have to get reinsurance, so they're covered in case of a catastrophe. And a lot of the reinsurers don't want to deal with it. So,
really?
Oh, yeah.
I was thinking about golf ball ricochets, Chino Hills and Corona.
There's that, but but no, seriously, they're anybody that's up against if the back of your home is up against a hill or something like that, you're going to have higher rates if you can get insurance, or you're going to have to go into what they call the California Fair Plan as part of that insurance package.
Is that a governmental thing?
Well, it's actually funded by all of the insurance companies that do business in California, and in association with the California State Department of Insurance. So it's kind of like backed up by the state in some ways, but mostly it's backed up by all of the insurance carriers that do business that are admitted into the state of California.
Gotcha. So it's not a bad deal. You just got to be in the right area. Now, what is this thing with zip codes? Every time, you try to get an insurance policy, they go, well, what zip code do you live in?
Yeah, they're going to want to know, what the risks are in that area. So
I live in Compton.
Okay.
No, I'm just kidding.
No, actually, Compton wouldn't be a big
it's
problem.
It's probably a good one.
It probably is, because although I haven't done a lot of business in LA, but in the city, there generally are lesser risks for catastrophes.
Yeah, fire's not going to roll through the city,
right.
Like
hopefully.
that. Yeah, right?
Right. Yeah. I mean, in some of the areas of LA, maybe fire would roar through the city, but for a different reason. But typically they're looking at the risk related to urban versus wild or, wilderness.
So if I had a house in the middle of Pocatello, Idaho, and I got 20 acres, would that be good?
It would probably depend on where the home is on those 20 acres. But that's another, I don't know too much about out of California.
You're just primarily for California?
I'm doing business here, and I'm familiar with this market.
And you're house hacking in California.
That is correct.
Oh, I got to get you out of CA, man. I mean, it's really cool. It's different. Weather is, nothing beats California, sorry to say.
Yeah, I agree. And I actually had a question about that. So you mentioned that, a lot of the insurance, the premiums are based on, it's multi-pronged, right? About why these three major insurance companies are moving out of California.
Right.
One of which has been the weather. But do you foresee, based on the other factors changing in the future, that might change, that the companies might, consider moving back?
I can't imagine them ignoring California forever.
Right.
But a lot of it is regulatory. So back in, I want to say 1986 or so, California put out one of our initiatives, and we voted for a California insurance commissioner. So before anybody can raise rates in California, they've got to get this approved through the commissioner. Now, if you really study it, they can automatically raise rates up to 10%. So you see a lot of applications from the insurance companies to raise the rates by 9.9% because they just don't want to have to deal with the insurance commissioner. Yeah, but anyway, the bottom line is that what has happened is it's caused us to have good rates, and that's good for everybody. Everybody likes that.
Yep.
But at some point, it had to come to a head, and that's what happened in the last 2 years. So we've had an emergency, and the California Insurance Commissioner now knows that. And he is starting.
Only took him 3 years.
Yeah, if you read about it, you'll see that the governor has issued a statement. He's asked them to do some things.
Yep.
And nobody wants to be the guy that says, "Yeah, we're going to allow insurance companies to raise their rates out here." They don't want to be that person. Yep. But the truth is, they've chased a lot of big carriers out of the state, and they're going to want to come back, but they're going to end up. Well, it's going to be more expensive. That's
maybe Elon Musk will start an insurance company.
Maybe he will.
Or Jeff Bezos. They got enough money, right? Keep it all going. Maybe they'll back it. Who knows?
Yeah, but they're going to want to make money, and of course, I think these insurance companies are making money.
Of course they are.
I'm not worried about them. Yeah. But I will say, they're not going into deals where they know they're going to lose money either. And that's kind of the situation in California.
That's why the application exists. What's going on? Who's doing it? Why?
Right. And they want to look at your claim history.
Oh,
so
really?
When we get a call, I get calls all the time. Oh, yeah, my carrier dropped me. And, I'm shopping around. And I have to ask them, have you had any claims in the last 3 or 5 to 5 years? And they're like, yeah, we had 2 claims in the last 3 years. I really don't have a carrier for them.
Really?
I actually have to go into what's called surplus markets, or if put it simply, these are good insurance companies that are not admitted in California but are willing to take some risk out here.
Really?
And it's going to cost a lot more. So I tell people, look, think of your insurance for your home as a tool for catastrophe, right? Don't if your water heater breaks, don't be making a claim for $1,200.
Yeah,
it's just not worth it. And I know that's why you buy your insurance, but in today's market with the difficulties that we're seeing, it just is not real smart to make small claims. You're better off covering that
because that stays on the record for 5 years.
Yeah, it stays on. Who knows? It stays on there.
Why
who knows?
Why not just get one of those home improvement, insurance things that covers water heaters and
it's
cats,
probably not
dogs,
a bad idea.
whatever.
Yeah.
Wow, Steve,
Yeah.
I never knew, man.
Yeah.
Seriously?
It's really gotten complicated.
So you take all this in consideration when you're doing a loan too.
Oh yeah. I just we're funding a loan next week for a gentleman, and I always tell people right off the get-go, I said, get a quote for the insurance, because in every transaction it seems like the insurance is always holding us up, and it hasn't been decided on until the very end. And this one couple, I thought it didn't seem like they're buying in a high risk area or anything. I figure, the cost shouldn't be more than $1,500. That would, for the whole year, that would be a lot.
Yeah.
The quote that they got was almost $4,700.
Oh.
So, and what happens is, luckily it didn't affect these people, but with a lot of borrowers, it'll affect their ability to qualify for a loan, because if you plug in $1,500 a year for insurance and then the quote comes back $4,700, that might make or break them in getting the loan, or maybe they all of a sudden have to put down more money.
$300 more a month.
Or
Hello.
they have to buy down the rate. I mean, there could be a
Wow.
lot of different things.
So it's a balancing act, really,
Yeah,
when they're doing this
yeah,
loan stuff.
It really is.
Well, thank God you know how to juggle.
Well, we've been juggling for a while.
Steve's
so.
in the house. You ever see him go down the street? He's got a ball he's balancing on. He's got things in his hands. That's this guy right here. Wow, Eric. Now you got this insurance stuff because it's a big thing for you too.
Absolutely.
You know, not only do you have to worry about, not really worry. I mean, I can see you kind of like you and your wife in Hawaii, doing one of those YouTube videos. You're like clanking the glasses. Here's the entrepreneur's sip, right?
Yeah, definitely.
Is that where you want to be?
Hawaii would be nice.
Okay.
But for the short term, at least we like to stay in California.
Cali?
Despite all
All right.
the, the fire risk and things like that. But, we just make sure that we always have good connections with, our financing person as well as our insurance person. So what you guys are both doing is absolutely really important.
It's a huge thing to your game, man.
Yeah.
Especially, in my industry, home improvement, I have this term that I use quite often, and I think it applies to everything. It's called "your cheese has moved." Am I right?
There's a book called that.
Right?
Yeah.
Oh, really?
Yeah, what moved my cheese or what something like that. I've
Oh,
read it. Yeah.
really? Okay. I had a box of Cheez-Its one day, and I was eating it. I go, "Oh, my cheese has moved."
Did you make up that phrase?
I'm just kidding. I don't know. I should probably trademark it. If not, it's done already. But environments change.
Yeah.
Right? It doesn't matter. You may be, they say you get rich when you're young or you get rich when you're old. Like, I'm not going to say me or Steve. And Joe, you look kind of young.
I feel young.
You're in your 50s? In your 50s?
I'm a little older than that, but
Okay.
I don't like to tell.
Yeah.
So I'm old enough to not want to tell.
All my friends say, it's just a number, so stop. Life is based on what you put into it, right? If you don't put anything into it, then you've either won the lottery or something else has happened. So it is what it is.
Right.
That being said, what's this on my phone? Oh my goodness. Wireless caller, dismiss. Gotta love these things, right? But anyways, house hacking. I can't wait to get involved, really. And I want to share some stories with you. I have some stories on just renting properties, and I knew absolutely nothing. Then me and my friend next door, Annette, she's a broker, and then we collaborate a little bit. I even took her real estate courses to learn more about the intricacies of what a realtor really has to do, right? I mean, I took I think 150 hours. It was grueling, and she's tough, man, let me tell you. But I still remember everything she taught. And then I met Steve he was giving a class there one day, and I bump into this guy, and he's like, "Hey, I'm Steve." Of course, he has all the swagger, I don't have half of what this guy has. He comes out polished, and he goes, "Hey, if you ever need a loan, give me a call." So from that point on, we just kind of became friends, and then Steve has opened me up to other things on the internet as well. So thank you, Steve, for all that, man.
You're welcome.
But house hacking, man, we need to talk.
Yeah.
We got to talk. I want to learn about, is this your first house you're doing it with now?
No, this is my second house. My first house I purchased in August 2021. It's a duplex.
Okay.
So it was kind of like the more comfortable version of house hacking, where I lived in one of the units and just rented out the back one.
Oh.
And in 2021, the interest rates were amazing. My interest rates are in the twos.
You got really? Seriously? Oh, you got the best, man.
Yeah, and I utilized an FHA loan. So
no.
So it's a 3.5% down loan backed by the government.
They didn't ask for 20 or 30%.
No, they did
Good for
not.
you, man. Wow.
Yeah, so that was my first house hack. And then after about a year, I moved into my current one, which is a single family home that I'm renting by the bedroom. So both of them are different strategies, but different types of house hacking.
And they're both successful at this point.
They're both doing pretty well, I would say, for myself. So
you don't have a day job?
I do have a day job. I
currently
have a day job, yes.
That means not forever, right?
Currently, that's all I'm going to say.
Okay.
But I'm a pharmacist by training. So,
No way.
Yeah. So graduated like a few years back and then been working mostly at larger drug companies such as Genentech and Amgen. Now I'm at a smaller startup in Irvine area, but mostly working on the medical team.
Oh, nice.
So yeah, still do that, but also, make time for investing in real estate such as house hacking. And also
You got to put that extra money in different pockets, right?
Exactly. Divest.
Why not do it in yourself?
Yeah.
So I can get all my pain meds from you, right?
We'll talk after the show.
Yeah. Oh, wow, man. That's incredible. What does your wife do, may I ask?
Yeah, she's currently finishing up her PhD at the University of Riverside. So that's why next year is a big year for us. So she's looking to finish.
She wants to be a doctor?
She's studying plant molecular biology, so she's definitely the smart one out of the two of us.
She's a biologist.
Yes.
That's definitely smart. And here we are, Steve. I'm a contractor. You're a loan guy, and we got an insurance guy in the room. And we got two people here. They got PhDs and DFGs and HIJKs.
You guys are different levels of smart. So
We're what they call back in the day when we were young. We got beat up a lot. And we beat up a lot of people and stuff like that. What do they call that? The rules of being smart. The hard way, the what do they call that? Hard knocks?
Yeah, School of Hard Knocks.
School of Hard Knocks, right?
Yeah.
You've been there, right? You've graduated? Okay, you look like you graduated. So I and Steve. But, and then we just get a little bit more technical, right? And now we're mentors. That's a good thing, but it has an old tendency to it. It's like the old guy that knew how to, just steer the boat. And I'm talking like a pirate ship. I'm not talking like a schooner, which you and your wife will get in and drive. But
I was imagining a yacht. So
yeah, there you go.
I have a question for Eric.
Yeah.
So Eric, how do you determine, or how do you shop for these homes? What are the characteristics you look for?
Yeah, so I usually look at first at the area. So for me, you're talking about a house hack, and as you mentioned before, you have to live in there for at least 1 year. So it has to be somewhere that I want to live in. And I still work my W-2 job, so I would be kind of relatively close to that. After that, you can get really creative. I've thought of different ways of like how I can house hack. So for example, in today's high interest market, I've thought of more creative ways such as like purchasing a single family home and building an ADU or accessory dwelling unit in the back.
Nice,
so I'm looking for like a single family home that kind of fits me and my growing family needs, but also has enough space in the backyard where I can build like, let's say a 450 square foot ADU.
Right.
Something else I'd be looking at is like either 2 to 4 units that have, a certain number of bedroom counts, and looking at the rent that each of those units would generate and kind of going from there. So it's not really a cookie cutter like characteristics to an extent. Of course, I'm looking at like specific areas and sizes and rents and things like that, but you can get creative with the type of strategy you implement.
So an ADU, is that like an additional unit that you add on or build in the yard or something like that?
Yeah, so you can like build it in the yard, and a lot of people do what they call like a garage conversion. So they have like a single family home with the garage, and they turn that into its own individual unit, and you kind of block it out and have someone kind of move into that.
Yeah,
so.
I think in Chino Hills they just approved a measure that allows people to add these ADUs on their property. It didn't used to be that way. So I think they recognize that there's a lot of people. I mean, the first thing I thought about when I met you and you told me about this is that it's needed. There's a lot of people who just can't afford the rents in a home today, or even an apartment. In fact, I've lived where I live for 32 years, almost longer now. And when we've just, looked around, what does it cost to rent an apartment down the street here? And we're like, oh my God, our mortgage is less than that.
It's almost, yeah, exactly. Thank you. My mortgage is much less than that.
Right.
And, the ADU, by the way, I've looked into that. So if you find somebody that builds it really cheap per square foot, let me know.
Okay.
Because I had guys bidding me up to $350 a square foot.
Wow.
Crazy, right?
Yeah.
It is what it is. But, there's things out there you got to look at, and I think the reason they're letting ADUs come into California or Chino or wherever else, San Bernardino was a no-no. Now they're letting everybody in. It's because there'll be another 2 billion people in less than 13 years here in the United States. And they're all coming to California. I don't know if you've looked at all that.
I think
Biden's letting them in Texas. Well, that's another way to get in.
You,
And then everything
be
else.
thinking in the world, because California has the United States has about 350.
Oh, maybe
million.
it's the world.
Yeah,
I don't
it has
know.
to be the world. Okay, but
brain
it's still
fart.
we know
That's
they all
still
want
a
to
lot
live
of
in
people,
California.
man. McDonald's is going to sell more hamburgers, but it is what it is. And that's 2 more billion people on this planet.
Yeah,
I guess we're not dying fast.
and they
enough,
want to
right?
live in California.
They all, I don't know what it is. Hopefully my soon-to-be ex-wife will let me have the house, and I'll do what Eric does. And we'll go from there, and I'll make my living as I send off into the sunset. But anyways, house insurance is very important. Do you do just house insurance alone?
No, I'm licensed for pretty much all categories.
Car insurance too?
Yeah,
Really?
But on the other side, we don't have markets for car insurance, and I do very little of it. I actually refer most of it out to a specialist who is a good friend. So when I meet a client that wants homeowners and car, I'll do the homeowners because that's really the direction I'm interested
Very
in.
cool, yeah.
Yeah, and I feel like specializing has helped me to be better at doing it for them. And then I have specialists for car insurance, at least in this market.
Okay.
5 years from now, it could all be different, and I'll want to do it all. But right now, my specialty is
homeowners insurance.
And I do like business insurance, too.
Oh, okay.
Yeah.
Like for collectibles like this in my room?
Yeah, you can.
Okay, I'm going to have to give you a call.
Yeah, there are carriers, and you'd be surprised. I mean, a lot of this stuff can be very valuable, and people don't think to insure it.
Yeah,
so,
right.
It'll often be covered as long as you name it, as long as you itemize what you have.
Gotcha.
Insurance carriers are happy to cover it.
Sure. House hacking, man. Eric, woof. That's cool, man. Steve told me about it. I'm like, house what? Who does this stuff? Oh, this guy Eric does. You got to listen to him. And I'm like, got to bring him in, man. Get him in here. He says, well, he's getting married. I says, get him in here.
Steve was talking me up. Thank you for that. I appreciate it.
Well, I listened to him at our club, and he said he did speak for a while, and I was extremely impressed. And that's sometimes, I listen to the people, and I say, wow, these people would be great on our podcast. So I, invite him, and fortunately, he would be able to fit us into the schedule because, he's got his regular job and everything, and it's hard sometimes. There's people that I've had to make appointments with, several months in advance to get them on the show, but they'll eventually come in.
Well, you know what, young man? First and foremost, congratulations. You stepped into the reality of marriage. And now you've got your best friend. You're hanging out. You're going to collaborate. You're going to do all kinds of crazy stuff. Drink hundreds of bottles of champagne and do all the above and see the stars fly and everything else. I wish you well in your venture with house hacking because you might be a game changer and you might want to teach this stuff. Because there's a lot of people. Am I right, Joe?
Yeah, I went to a workshop once that was all about buying homes for Airbnb, but I think Airbnb is really a full-time job in and of itself.
That's tough.
This has more of a permanent feel to it where you're basically leasing out a room for a period of time. So you're not like every month or every week looking for a new tenant and having to have a cleaner come in and clean it.
Right.
Not that you want to keep it clean, you want to find good people, but just thinking about the more permanent nature of it makes a lot of sense to me.
Well, you got to listen to Stephanie's podcast. Yeah. That was the last one, 66, right, Steve? Or 65?
I think it was 65.
65. Yeah. He has this young lady. She's an entrepreneur, and she's a nurse.
She's also in the club.
Yeah.
Oh, do you know Stephanie?
Yeah, I do know
Of
Stephanie.
Course. Now she's a firecracker. Am I right?
She's great.
So he should pair up with her and then triangulate you, and then Steve can fund everything while he insures it.
Yeah, there you go.
And then we'll talk about it on the podcast.
Hey, there you go. Yeah, we'll do that. We'll do a mobile pod. I'll bring it with me. Yeah. We'll just talk at the show, right?
Bring it full circle.
Right? Why not? I mean, holy geez, Batman. I mean, there's a lot of stuff going on, Steve.
Yeah, there sure is.
House hacking.
Yep.
I can't thank you enough for introducing that to me. And we all think of that, right? Of different ways to do it. But if you just sit down and you put down that yellow pad of paper and get a pencil, right? And you start getting creative, guys like Eric appear. And house hacking. I love it.
I met a guy at that Airbnb thing, and he actually somehow figured out a way that he does Airbnb on homes he doesn't own. Now I know that.
Yeah,
sounds
that
a
we
little,
talked.
Yeah.
We talked about that at the other podcast. It's called arbitrage. So,
Arbitrage, yeah.
And I don't really know the details. I asked him a lot because I thought it was, just so curious about it. But he says when he negotiates with the landlord, he discloses it.
Right.
So he's not
Yeah.
trying to lie
Nope.
or trick anybody. And there are
Arbitrage.
some that
Yep.
will
Yeah,
do
he
it.
gets a master. The tenant gets a master lease, and then once he has that master lease in hand, he'll go out and do his own thing with the Airbnb, and the spread between what he makes and what he's paying on the master lease, that's the arbitrage. And that was actually one of Stephanie's first properties was like that.
Interesting.
Yep,
and now
arbitrage.
she owns her own properties altogether, but that's the way some of the people end up getting into the business, especially in high cost areas. I have a friend, and he does Airbnb over in Nashville, and the prices are extremely high. He was buying condos that were close to $1 million a piece.
Condos?
Yeah.
Jeez.
And right in the center of downtown Nashville, and he has a management company manage it for him. And he makes money, with the Airbnb because he's over here and he's doing his own thing.
Nice.
And so he had an apartment building and over here, and he was so tired of dealing with some of the tenants, and I financed it many years ago for him, and it's just that with the appreciation of the apartments over say 25 years, he just figured, well, let me see if I could take this equity and do something else with it. So he went to Nashville. He bought 2 condos with the equity, and he did what we call a 1031 exchange, so he wouldn't pay the taxes. And then he had a management company, and they handle all the the day-to-day details on it, and he just he collects his payments, so he's very happy with that, and without dealing with the long-term tenancy of the apartments.
Living the life, right?
Yeah.
Joe, that's episode 65. Arbitrage.
Oh, okay. I have
You
to
just
listen
you
to that.
just got to go. If you get your favorite, it's on Google, Amazon, they're all out there. And sometimes I'll stuff it on YouTube, I think, but episode 65 is very interesting. Stephanie pops up, man, and she puts on her roller skates and she just goes. And then the arbitrage thing was another mixture of collaboration and being very creative, like this guy Eric here is.
I have a
never-
question about that too.
got
Another
anything.
one. What is the difference between, let's say, leasing a home for a year, let's say on the other side, Airbnb, and then you guys are sort of in the middle. You're doing long-term rental of rooms. Is the rent higher? Are you getting more revenue from that? Or?
Yeah. So just to clarify, so right now, like you can do long-term rental of like individual rooms. You can do them furnished or unfurnished. Usually the furnished ones will hit a different market. Some people who don't really have a lot of stuff, or they're like, travelers versus the unfurnished where people are looking to live there for at least a year. The market that we're actually in is we're actually doing 30-day minimum. So it's not really an Airbnb / short-term rental where you can do one night stays and whatnot. We actually make our tenants stay at least 30 days.
Right.
And a lot of them have stayed, 1 or 2 months, but I have a couple tenants that stayed over a year. And so it's like, well, we're kind of offering them we're further catering to these tenants because we're giving them additional flexibility in the lease time that works for their schedule. But to answer your question, this model allows us to charge increase in rents. And so when me and my business partner talked and kind of worked through the numbers of what, let's say, a vacant room would cost, it's really the numbers didn't really match up for like what we're trying to accomplish. Even when I moved out, like it didn't really cover the mortgage. It's not even breaking even. But we got a little creative because it's like, well, with this furnished model, it's like, and not necessarily forcing when you're leased, because then you'll decrease your tenant pool, because a lot of the tenants we're looking at are working professionals or they're there for like, 1 or 2 month projects, such as one of the construction tenants that we had there not too long ago. It's like, well, now we're widening our pool, but we still have that increase in rent. I hope I kind of spoke a lot.
I think to me it seems there's 3 different levels
there are.
of revenue. The Airbnb probably being the highest. Maybe what you guys do somewhere in the middle, and then just leasing it for a year. That's where that arbitrage comes into play, right?
They call them short-term rentals and long-term rentals.
And then this
STRs.
category is a medium-term rental.
MTR. Hey,
So,
no
yeah.
one's got that yet. Nice. MTR.
It's relatively new. It's relatively new. I would say it came out in the last like 1 or 2 years. It started becoming popular, and there's like one figurehead who kind of like is the leader of that movement. But essentially, it's the idea that you don't run into a lot of these short-term rental regulations that are associated with Airbnb because it's longer than 30 days stay, longer than a 30-day stay, which is what a lot of these regulations fall under.
Right. And I can imagine if somebody as long as they get along with the other tenants, it's why wouldn't they want to stay there for as long as they need to?
Now, do each one of these rooms, they have a lock on them like everything else?
Absolutely.
Okay, so you treat it like an apartment, if you will. They got their lock, they got their mail key, or the mail comes in and you probably categorize it to whoever's there, right?
Yeah, so I distribute the mail, and of course they have their own spaces. So they have their bedroom, which locks, of course. We provide them with bed cover, desk, chair.
Big screen TV.
We don't have enough room in our in our rooms for a big screen TV, but
All right.
some of them do.
Okay.
And then we have like shared spaces for like the kitchen, but then there's also like designated spaces for their own stuff, for the kitchen, for the closet. So we make sure that they have enough like comfort with like being able to store their own stuff.
Like a garage and stuff too?
We have a garage.
Okay.
And we kind of assign it to two. It's a 2-car garage, and we assign it to 2 different rooms. And we, upcharge the rent based off if they have garage access
Separate
or not.
refrigerator maybe as a convenience?
We thought about having a second one, but right now we have been getting by with just one refrigerator.
Really?
But we're thinking about maybe putting another one in the garage and just kind of like making it more comfortable.
You
we're
get
kind
the
of
red
working through that.
stickers, he gets the blue ones, and he gets the green ones. Those are my apples.
Yeah, pretty much. So.
Very cool, man. So you're spreading it all out. And I like the approach that you might be doing something in the garage. That can be kind of a storage / this is your food area, this is your washing area. I mean, wow, Steve, it's just, this guy needs to get into the hotel business, I think.
Bring me back in 5 years and we'll see.
Hey, right. 5 years from now. Oh, my goodness.
What about laundry? How do you handle that?
Yeah, we have an on-site washer dryer that's in the garage, and they kind of just figure out, who is going to wash
Steve's on
away.
Mondays.
Yeah, Steve's on
Chris
Mondays.
is on Tuesdays.
Exactly, but it's essentially a washer dryer that me and my business partner provided for.
I dig
use.
it. I totally dig it, man. That's very cool. And these are like, furnished garages, and they're like fully, they got drywall in them, or maybe not, maybe so, right?
Yeah, the garage is completely finished. So the house is
Okay.
actually pretty new. It's a 2008
yeah.
build, so it's pretty good shape.
Okay. Fire sprinklers, all the alarms in it and stuff like that. Do you do you provide like a monitoring, a security system in there for everybody to keep them safe?
We have security on the outside, but we don't have anything on the inside for privacy reasons.
Oh, I see.
Yeah,
Gotcha. So outside, you're keeping them safe.
Yeah, just making sure that nothing's like crazy.
Yeah,
or anything
yeah.
like that, so.
That's fantastic. And then the insurance guy here, Joe, you got to figure out what to do for these people, right?
Yeah, it doesn't sound real complex to me. It sounds like you'd insure it like you'd insure any other home, especially the way he describes it. You're going to be living there at least for a year. I suppose if you ever moved out, ethically, you'd probably want to notify your insurance carrier, and you might have to reclassify it.
I see.
But typically, if you're going to be the primary owner and you're just maybe leasing out a room or 2 or 3 even, I don't think that most carriers have a real issue with that.
You don't insure in Georgia, do you?
Am I licensed in Georgia? I don't think so.
Oh, goodness.
I do have licenses across the country, but
I need help. We need help.
Yeah.
All right, maybe I'll hit you up. Maybe you can find somebody for us.
Yeah, I might be able to help.
The investor property is a totally different animal, right?
Right.
You
It's treated
got your
different.
primary, then you got your secondary. They're stretching a little bit, and they're like,
well, they're looking at
8? Come on, right?
Yeah, at some point it's a different equation.
So we'll have to maybe give you a jingle.
Yeah,
You
I'd
can
love to talk to you about
throw
what
it in the hopper and shake it up really good. Maybe something positive will come out of that.
Yeah.
Fantastic. Steve,
Yes, sir.
You're sitting there just listening to all this knowledge, man. I mean, everybody's just letting it go.
It's great stuff. That's
oh, my
why
goodness.
I brought these people in because
oh, my gosh.
we're here. We like to try and educate people. And I'm sure even a lot of people out in the audience today, you mentioned house hacking. They thinking, what is that? You
right,
know?
exactly.
And all of a sudden, you know another term that you weren't aware of. So it's all about educating the public and bringing forth a concept that somebody, might enlighten them and think, because I know when I bought my first home in the 70s, I paid $72,900 for the house. My house payment was like $700 a month, but that was still a high payment at that time. And I ended up, it was a 4-bedroom house. I stayed in 1 bedroom. I rented out, the other rooms to people I knew.
You were house hacking in the 70s,
yeah,
man.
I was house, and I didn't even know it. And it's just, each person, pitched in for utilities and for their share of whatever, and it made the house payment that way. I didn't have to worry about coming up with the money all the time, and so it made it easy. So that was like an introduction, and who knew? I mean, now there's a term for it, but back then you were just
hashtag house hacking, right?
It seems to me that there's a lot of young couples and a lot of single people that want to enter the housing market. They want to, they want equity, and they are probably discouraged because they don't know about things like this. So just by doing this podcast and you sharing these ideas, Eric, I think you really are helping people because with the prices of homes in California, it can feel hopeless for a young couple today. And so this is, it's really exciting to hear about.
You know what? We hear this all the time, and when rates go up, that's just like this young couple can't get that. You know what I mean? Mm-hmm. It's like they're working full-time jobs. They're the guy's working 60 hours a week. She's pushing 60 hours a week. They got 2 kids. Are you kidding me? One of my daughters has a boyfriend in Riverside, and they have this place. Man, they both pump this in there, and they would really like to come out and buy a house. Even a little house like mine, Steve, you were talking in the 70s, right? Got my house for $86,000. You got yours for 70, right?
72,900.
72,900, baby. You'll never see that again.
Yeah, probably not.
Unless I get hit by a truck and I kind of give it to my kids anyways, which is cool with me, right? But the new kids coming out that are moving to different parts of the United States, especially the California market, the interest rates are high. The housing prices are high.
Right.
They're a first-time buyer, so they may get some FHA hope, right? And I think $20,000 or maybe the VA stuff.
Well,
if the guys in the military.
VA is no down. Now we have a conventional product with 1% down, which is great. Yeah,
Steve.
And then the FHA you can actually do with 0% down because we have a way of financing the down payment. So, I mean,
creativity, right?
Yeah, if the people have the income, that's the key. I mean, even credit, a lot of times, we'll do FHA loans down in the mid-5s. So it shouldn't hold people back. And then the other thing we do a lot with non-occupant co-borrowers, meaning you'd have maybe a relative, maybe across country. I've done them. They live in the Midwest and they're helping a relative in California buy a home. So they're helping them qualify because the one person won't qualify on their own. And so you just put everybody together in an application, to make it work. So, I mean, that's one thing I can say about lending. As it's contracted, it's gotten more creative, but in a good way. Not like 2007 where you basically just let anybody, get a home loan. I mean, with no credit, no money, no income. But now it's a little more structured. You got to qualify, and you have to have some credit. and most of the time you're going to have a little bit of a down payment. So
6 months ago we would have talked about this. That was not even going to happen. The environment changes all the time,
right?
Especially in your industry, man.
Right.
So, wow, this guy can juggle a ball. I told you.
Yeah.
He's balancing a ball and he's juggling at the same time. Steve's a magician at best.
Well, we like to accommodate people, and people come to us usually. They've been turned down maybe by other lenders, or other lenders are taking too long. I just had somebody that you actually know, that they were with an unnamed bank trying to get a loan for. This is just for a HELOC, and for about 6 weeks, and nothing was happening on it. And they talked to me about it, and we'll go ahead. We'll get them, their application, and we'll close the loan in less than 10 days. So
10 days?
Wow.
Yeah,
That's really good.
Yeah, I just did one. We closed the beginning of the week, and he was a club member too, and he came to me and we talked. He didn't want to do anything right away, but he does a lot of house flips. And I just mentioned, hey, it might be nice if you had the money available to you. So he has several free and clear houses, and we took an investment property, which not everybody will do a HELOC on those, and we got him a loan, and it closed in 10 days, and he couldn't believe it. And he wakes up one day in the morning, looks at his bank account, and he actually, I talked to him yesterday, and he said, "Oh my God, I'm rich," because the money was wired into his account.
Hello.
And he'll use that to go ahead and buy something else. And
that's great, man.
And I help a lot of the club members. They, like with mobile home financing, that can be very difficult to get financing on. One of my clients, he's in the club. He owns like 25 mobile homes, and it's hard to get financing. And it's like people like to go by the term using other people's money.
OPM, baby. Oh,
and
yeah.
So, he'll come to us. We'll get the deal done quickly, and he's happy. He'll have more money to buy other rental properties. So it works out good for everybody.
May the force be with you, Steve-O.
Yeah, thank you.
Hey, tell me about this club. You got to let everybody know, man.
Well,
if anybody's got half a brain and a heartbeat, and you want to be an investor or a person that wants to learn from these pros, where do they got to go?
Well, they can contact me, and I can direct them in the right direction. Just go to my website, financialbrokers.net, and I'll send them the link to the club. It's a great, club for people who are looking to invest or to build their portfolio or just to learn. I've had people that I've gotten interested and gotten them to join the club, and they did their first flip. They were scared. They took $25,000 and they made $300,000 net profit on their first flip.
What?
And they didn't even want to do it. I mean, I had to twist their arm, and finally they did it. And I said, they're realtors, and they had the listing. I said, you need to buy the property for yourself, and you could fix it and then flip it. And finally, that's what they did. And they were happy that, they did that, and they came out really well. And, we're always bringing in new people, and a lot of times young people. We had a meeting on Wednesday night, and I talked to somebody there. He's 20 years old, and he just sold a mobile home. They're making a $40,000 profit on it.
What?
And I mean, I wish,
Wow.
like when I was 20,
Yeah, oh my
if
goodness.
somebody had
Yeah.
taught me some of this stuff, and I had to learn everything on my own. I didn't have a mentor per se back then, or if there were clubs like this that I could have joined, it would have been
Steve,
wonderful.
we were using pagers.
This was actually before pagers.
Beepers. Oh my God, right?
And when the pager market came in, you'd be driving around to try and find a phone booth where the phone was actually working. You'd pull up and this phone's no good, and then you'd go to drive down the street to another phone booth, and by the time you called back, the person had already left.
It's too late, man.
Yeah, and
you pulled out your Thomas Brothers map to find the next phone.
Right. Well, as far as like for the realtors, I mean, they had to map everything out with the Thomas guide.
Incredible.
I mean, you could imagine if they were showing 10 homes that day, and then what if they threw off the schedule and another home came up and they wanted to show that?
Oh, yeah.
And I mean, logistically, how difficult, it was then. And now, we take it for granted, all the tools that we have, with the navigation and with the computers and everything else. It just, it's made our life a lot simpler, and it's allowed us to do so many more things.
You know what I ask? We all ask Google for everything now, right?
Right.
You know what I ask Google mostly when I'm driving?
What?
Find the nearest Target so I can take a pee. Sorry about that. I throw that in there. But you're right. Times have completely changed, and it's just amazing. So yeah, power to you, Steve. It's just really, really cool, man. Lots of things have happened. Eric in the house, man. I'm proud of you. Look at this. How old are you now?
I'm 31.
Jeez Louise. When I was 20, Steve, can you reflect the same? My dad pointed out the door and he says, go to college or join the military. Yeah.
Well, when I was in college, I was doing car hacking. I was buying, cars. I did it out of my house, and I was flipping cars, and then I got into exotic cars and things like that. And, the neighbors were complaining because I had cars lined up and down the street. And then finally I would take a car if I had it for sale that day, and I would park it around the corner to show it, because the neighbor maybe down around the corner didn't know who I was.
Yeah.
And then I would show that car to a prospective buyer. But they get upset if I was showing cars
in the neighborhood, right?
Well, in my
real
driveway,
estate, man, real estate, right?
So then finally, I rented a little industrial building. It was like $360 a month, and I stuffed it with cars. I had it. I probably had like, I don't know, I could put like 15 cars in there, and then I sublet out the back of the building because.
Of course you did.
Well, what happened? I had a friend that he opened up a smog shop, and he needed a smog shop near the test center, and so I said, "Hey, I've got this building." So then he was running, a smog shop out of the end of the building, and I had all my cars inside. I had a mechanic working on them, and then I could sell them out of the building, and I would go all over the country looking for cars. And I had a truck and trailer. I drive to Arizona. I put a car on the back of my trailer, take it back home, fix it and sell it. One time I went out
car hacking.
Yeah, it was car hacking, and I went. Of
course, Steve rented to the smog guy for only $360 a month.
Where'd that number come from?
Right?
I went out to Missouri
Genius.
in the middle of winter. I bought a Corvette. I figured, I could get a good deal on a convertible out there. So I found this. It was a 70 Corvette, and I paid like $5,500. Really nice car. It was a good deal back then. The only thing is the heater didn't work on the car. And I'm, driving back home from Missouri.
In the cold weather.
Well, in a snowstorm.
28 degrees.
It was 28 degrees below zero. And, I'm from Minnesota. I'm kind of used to the cold. But
stuff,
still,
right.
I wasn't even dressed for it. I had a light jacket on. And and driving
and shorts
and not shorts, but I was driving through farmland, and we're out in the middle of nowhere, and I had no snow chains, no snow tires, and the first thing that happened 20 minutes from starting my drive, I ran into a ditch, and here I am. I mean, it's so cold, a car with no heater. And some gentleman in an old pickup truck drives by me and stops and says, "Hey, do you need some help?" I go, "Yeah, I need to, and there were no cell phones back then."
Yeah.
So he had a rope in the car, and we tied it to the back of the axle, and he towed me out of there. I probably wouldn't be here today if it wasn't for that man, because it was a lightly traveled road. I would have froze to death.
You were being watched over, my friend. Let me tell you.
I was. So, and then I kept on my journey, and the weather was horrible, and I was basically slaloming across the freeway because I didn't, the roads were really icy. I had no chains or anything, and I couldn't drive faster than like 30 miles an hour, even on the freeway.
And you're coming from Missouri.
Yeah, I'm coming from Missouri.
Oh, boy.
And since the heater didn't work, the defroster didn't work.
Oh,
and so
boy.
the windshield would ice up, and I had to buy, a big case of de-icer at the auto parts store. And so every 20 minutes, I'd have to stop, de-ice the windshield. I had my scraper, because you couldn't even see the ice
Steve,
on the windshield.
Right now, I'm giving you hails. You are what I call the true rebellion.
Yeah,
You're
and so I drove, and then I stopped at a rest stop like halfway through, and I was so tired. I think I slept for an hour and a half at the rest stop. But again, no heater in the car. I woke up, there was icicles all over me, and I'm thinking, wow, if I do this again, I'm going to end up freezing to death. So
to say the least.
On adrenaline, I drove like all the way
back to California,
through the Rocky Mountains.
Oh, geez.
The only way I could, at night, I had to follow these big semi trucks to see their taillights. I had to follow them. I could barely see the road. And then if the truck got too far ahead of me, because I could only go 30 miles an hour, I'd have to kind of pull over and wait for the next semi to come by and follow that. So finally, it took me 55 hours straight driving from Missouri.
Straight driving?
Yeah, with just that
Oh,
1 hour and a half stop. And that was it. I got home. The car was a bright red when I left. When I got home, it was so black from soot, you couldn't even tell the color of the car. And then the key had froze in the ignition. I couldn't take the key out. So when I got home, we had to, take out a
welder and kind of get it out.
The steering column, we had to pull it apart to get just the key out. And then it had brand new tires on it when we left. When I got home, one of the tires had a blowout. The other one was bald from the slaloming effect, of going across the ice because it was so sharp. So
Steve, never take me on a car trip.
And that's the last time. I think I was 26 years old.
Ever want to hunt cars with you?
Yeah, I never went on a road trip after that. That was the last road trip I.
Well, God bless you, man. You made it, right?
I made it.
If anybody can get through that adversity, you got this.
Yeah. So it was quite an adventure.
Well, Steve, people are going to contact you to join this group. They're going to get a lot of good information. I can't wait to join and hang out with Eric here and the future maybe Joe. You got to do it, man. Come on.
Stephanie and Evan.
Stephanie. Woo, boy.
And Andy, all those
firecrackers,
people. Yeah,
man. A lot of good energy in this group, right? So, it's just amazing opportunities. So if anybody that wants to get into this kind of industry, episodes 64, 65, 66, and 67 is where you need to listen. And join this group because we talk about it several times, right?
Right.
So everybody, I can't thank you, number one, Eric, for hanging out with us. Congratulations, number one, on being married. You're finally with the old group, and maybe you get one of these white things in the future. You earn them, by the way. That's through kids and everything else. Joe, amazing, man. Yeah. Thanks for keeping us insured.
Well, thank you, and I appreciate you having me on the show.
Oh, absolutely.
I do want to say, if I may,
absolutely, give me a plug.
Yeah, well,
how do they get a hold of you, by the way?
Yeah, I was going to say, if somebody's interested in kind of getting a feel of what their insurance will cost for a new home purchase, they can go to our website, causewell.com, just the two words strung together, no spaces. And if they put in CAUSEWELL.com/how much. And
really? That's cool. What a great name.
What we do is they'll fill in a very short form, and we'll give them just a rough idea of what the insurance might cost on that home. We may have to call them, but, it's a simple form. So
simple form. I like simple.
Causewell.com/how much, and we give them an indication. And so we do that with a lot of real estate agents and so forth, and that's available.
And I know I've used Joe in the past where people couldn't get insurance, or the price was too high, or was taking too long. And I've gone to him, and he's helped clients of mine out. And so I know, by example, he's done really good.
He's the man.
For us. He is.
That's why he's there.
That's
Get him into the club, Steve.
Yeah, we'd like to.
All right, Joe?
Yeah, we have to look closer at it. Thanks.
Eric, you joined the club just a little while ago, I guess?
I've been in the club roughly 1, maybe 2 years now.
Really? That long?
Yeah.
God, you're a veteran now. That's great. A lot of good activity going on, right?
Oh, yeah. They have pretty much weekly educational sessions, and then every Thursday they have these exchanger sessions where people make lots of deals, and Steve is very active in those meetings. And
we call that Monopoly, where you trade Park Place for Boardwalk, right?
Yeah. But in real life, though,
right.
It's real.
It's the real Monopoly board.
Yeah, so lots of great types of meetings and lots of networking meetings. So learned a lot there and made some money from some deals there. So it's a great opportunity just to talk to people who are also have a mutual interest in real estate, and you can also learn a lot as well.
Hello, right? Eric's in the house hacker.
Yep.
Steve, let's close it up.
Yeah. Well,
firstly, thanks for that car story.
Yeah.
I definitely I'll hang out with you at the beach and stuff, but I don't know about
cross country car.
Yeah.
This is the guy right here that developed all those car shows. The guys that made him really cool and stuff like that.
You know what my nickname was?
All right, I got to hear.
In my 20s. They used to call me Greasy Steve because I was always under a car, and I would come out. I didn't know what it was, but I'd come out from under the car, and I was covered in grease.
You just worked hard. That's what it was.
Yeah.
I didn't know what it was, but sometimes I was out there, till midnight, trying to fix, a problem because I had a car coming out for sale the next day.
You got to get it ready, man.
I had to get it ready, or I'd be out at the dollar car wash detailing the car.
Oh, my God.
10 o'clock at night, I'm like the only guy there.
Your mom comes out the door and she goes, Greasy Steve, line 2.
Yeah. And so, it was a lot of fun, though. I met a lot of great people, a lot of great, memories. Even with
you have to show me the picture of your cars one day.
Yeah, and
Steve was the ultimate wheeler dealer.
No doubt, right?
I would go to the Pomona swap meet, and we would get all my friends and and I'd have them all drive a car out there. I'd have my truck with a trailer. I'd put a car in the back. So I'd have like maybe 5 cars out there for sale. But my big thing was parts, because I'd have some of these cars and
hard to find parts, probably.
Yeah,
right?
And people went crazy for parts. Like, I would have a car.
Are you the original AutoZone guy?
No, these were all used parts.
Yeah,
and,
And Greasy Steve's in the house.
And if anybody,
that's a show by itself, isn't it, folks?
if they're looking for old Corvette parts,
Oh,
I
my
still have a
goodness.
bunch of
Really?
old Corvette parts that I'd
Had to throw
like
that
to
in
sell.
there. All right,
So somebody could contact me for those.
OMG.
But
your primary business now is loans and stuff.
oh yeah,
like that.
for
All right.
for many
Do you do
years.
loans on parts by chance?
No, thankfully not. But my little brother, he was 13 years old. I would drag him out to the swap meet, and we'd put all the parts out on the ground, and he would be there selling the parts for me, because I wanted to look at the cars. I wanted to see if I could find more parts to buy for my collection. And then, he'd come back and hand me a fistful of dollars from the parts, that he had sold. And it was a lot of fun. I got him, involved with cars and
Does he work at
things
Napa by chance?
No. He
Okay.
He has his own shop, which I started.
Of course. Car shop, right?
Yeah, many years ago. But
All right.
He's
All
taken
right.
it to another level.
Well, if I
but-
need to get a collector car, I'm definitely going to give you a
Yeah.
run. All right. All right, Steve, tell me about Peak Finance. Let's wrap this up
Yeah.
and get these gentlemen on their way.
Yeah, Peak Finance, we're a direct lender. Again, everything from conventional, FHA, VA. We'll do reverse mortgages, private money. We do some construction, some land loans, HELOCs, a lot of commercial, SBA, things like that. So if anybody just wants to get a second opinion on a loan, give us a call. And again, go to my website, financialbrokers.net. You'll get a full list of disclosures, our licenses, and you can find out more details about what we do.
What's your number, Steve?
It's 562-818-3502.
Steve, I can't thank you enough. Let's
Thank
go
you.
car hunting one day. That'll be a short vacation for me, right?
Yeah.
Right?
You sure you don't want to go on a road trip across country?
Well, I just came back from Georgia in a
Yeah.
nice Delano
Yeah.
Mercedes. So maybe I'll hook you up someday. We'll do something like that.
Okay.
Eric, thanks a million. House hacking, #househacking.com. Eric is here. Thank you very much for sharing your stories, man.
Absolutely.
That's
happy to.
amazing. We just got to do more of that.
Yeah.
And I think maybe on the next segment or something like that, a couple shows from now, you'll come back and say you've got 4 more.
Yeah.
Right?
Maybe even more than that.
Yeah.
I'm just kidding.
The more the merrier, right? If it
Right.
works, why fix it? And Joe,
Yep.
the insurance king. Gosh, I got people I'm going to throw your way. You okay if I share your number and everything?
Absolutely.
Okay, cool. I'm going to get everybody out there. And it's coswell.com /
How much?
how much. I love it, man. Great show, Steve.
Yeah.
Thanks again, everybody. TGIF. This
Thank
is
you.
the Energy Hour podcast.
Thank you for listening to The Energy Hour. Visit them on the internet by going to qhiinc.com /TEO. That's qhiinc.com /TEO. Capture the joyful magic of the holiday season with Virtual Santa. Virtual Santa is a high-definition projection effect that walks, waves, laughs, eats cookies, and puts presents under the tree. From outside, it's so real, you swear Santa's in your house. Virtual Santa, originally seen on ABC's The Great Christmas Light Fight. You can choose from traditional Virtual Santa or new African American Santa.
Holiday effects include Virtual Santa, Mrs. Claus, Santa's Workshop with Christmas elves, and so much more. Buy one effect or a bundle. Available in HD DVD, digital download, or USB flash drive. Also available in LED projection bundles. For a winning Christmas display that will delight your neighbors young and old, visit us at virtualsanta.com and become known as the house where Santa lives. Virtual Santa, where holiday spirit begins.
This podcast is brought to you by Aliva Digital Marketing, lead generation and SEO for local businesses. Increase your web presence with their results in advanced strategy, including a video website audit and analysis for free. Listeners of this podcast can get 75% off Aliva's fees. But hurry, only the first 5 businesses that inquire can get this deal. Aliva Digital Marketing, a proud sponsor of this podcast. Online at alivadigital.com.
Solaria. Beauty, efficiency, and power. For nearly 20 years, Solaria has set the pace for solar panel performance, efficiency, reliability, quality, and design. Solaria continues to leverage its patented technology, engineering expertise, and sophisticated automation into creating one of the most attractive, energy-efficient solar panels available on the market today. Redefining home solar. Solaria's high-output solar panels deliver maximum energy production in a streamlined, all-black design that complements your home's architectural style with more than 20% more energy per square meter than traditional solar panels. Solaria's advanced Power XT panels pack maximum power into minimum space for industrial leading efficiency. Enjoy clean, reliable power day in and day out, backed by our 25-year warranty. Solaria is the new benchmark for solar energy. Quality you can trust for your home and business. For more information, go to qhinc.com/Solaria.